All right, welcome back to the deep dive. So today we're looking at, well, you know how like every country is talking about going green, right?
Right.
Like it's a huge thing.
And yeah, definitely. It's like all over the news and every politician is talking about it.
Exactly. But, actually financing that green transition is a whole other story, right? Like how do countries actually raise the money to make all these big changes?
Yeah, good point. It's easy to say we're going to do this and that, but finding the cash is, well, that's where the rubber meets the road, I guess.
So that's what makes what Slovenia is doing so interesting. Back in March of 2025, they launched the EU's first ever sovereign sustainability-linked bond framework.
I see. And this is like a new way for them to raise money.
Exactly.
Yeah.
And it's tied to sustainability. So basically they're saying, hey, we want to borrow money to make our country greener, but the cost of that borrowing, it's directly linked to whether or not we actually hit specific sustainability goals. Pretty neat, right?
So it's like they're putting their money where their mouth is? Kind of.
Exactly. And to make sure everything is legit, they got the whole thing validated by S&P Global. Those guys are serious about this stuff.
Oh, yeah, I've heard of them. They're like the credit rating agency, right?
Yep, they're the ones who give those credit ratings to companies and governments. So having their stamp of approval means that Slovenia's framework is, well, it's credible. It's built on a solid foundation. So that's what we're diving deep into today.
Ah.
What are the key parts of this framework? What kind of impact could it have, not just in Slovenia, but, maybe for other countries looking to do something similar?
Sounds pretty complex.
It is a little bit, but that's why we're here, right? To
Right.
break it all down.
Mm-hmm.
And of course, we want to look at the challenges too. Because going green, well, it's not always easy.
For sure, for sure.
So let's start with that validation from S&P Global. They gave Slovenia's framework what they call an advanced rating. That means it's really aligned with these things called the sustainability-linked bond principles. They were updated in 2024 by this group called ICMA that stands for the International Capital Market Association. They're like the big dogs when it comes to the bond market.
Okay, starting to get the picture. So Slovenia's following the rules, basically.
Yeah, and the rules are pretty solid. So this rating from S&P Global, it's not just like a rubber stamp. It gives Slovenia's approach a lot of credibility right off the bat. It tells investors, hey, this is serious stuff.
Right. So what makes this framework tick? What are the main components?
So basically, it boils down to three key performance indicators, or KPIs for short. These are the things that Slovenia is really focusing on. The first one, it's all about cutting down those greenhouse gas emissions. They set their baseline way back in 2005. And just to give you an idea, it was around 20,596 kilotons of CO2 equivalent.
Okay, that's the starting point. What
Yeah.
about the targets?
Now, this is where it gets interesting. They want to reduce those emissions by 35% by 2030. Pretty ambitious, right?
Yeah, not messing around.
But wait, there's more. By 2033, they're aiming for a whopping 57.75% reduction. Now, that's huge, even bigger than the EU's goal of a 55% reduction.
So they're like going above and beyond. But why set the bar so high?
Well, a couple of reasons. First, it shows they're serious about being a leader in this whole climate action thing. They want to be at the forefront. Second, it makes their bonds more attractive to investors who care about sustainability. And that's a big pool of money these days.
Right, ESG investing and all that.
Exactly. But it's not all just talk.
Hmm.
As of 2022, they'd already managed to cut emissions by about 24.2% since 2005. So they're on the right track,
Not bad, not bad. But they still have a long way to go, especially to hit that 2033 target.
Yeah, that's the thing. And S&P Global pointed out this kind of tricky thing. Slovenia is planning to phase out coal by 2033.
Which is good for emissions, right?
Yeah, in the long run. But the problem is that's the same year as their big target. So S&P Global is kind of like, hey, maybe pushing that coal phase out back till the very last minute might not be the best idea.
Makes sense. It's like waiting till the night before your exam to start studying. Probably not the best strategy for success.
Exactly. Okay, so that's the first KPI. The second one is all about renewable energy, specifically increasing the share of renewables in their overall energy mix. Back in 2022, their baseline was a little under 23%. Their goal, they want to hit 33% by 2030.
A decent jump.
Yep, and then a tiny bit higher, 34.65%, also by 2030. That second figure is in line with the EU's Renewable Energy Directive. It's called RED2 if you want to get technical.
Okay, so they're aiming to be in line with EU targets. But what are the challenges they're facing? I mean, ramping up renewables is not a walk in the park, right?
You got that right. And Slovenia has a unique challenge. See, a big chunk of their land, like over 37%, is designated as Natura 2000 protected area. That basically means it's off limits for big renewable energy projects. Think like massive wind farms or those huge solar farms.
Oh, wow. So all that land is protected. So how are they going to hit those renewable energy targets?
That's the million-dollar question.
Yeah.
They can't just go building wherever they want, so they need to get creative. Think smaller scale projects, maybe community-owned stuff, rooftop solar, that kind of thing. It adds a layer of complexity for sure.
Right. It's not as simple as just throwing up a giant solar farm in the middle of nowhere.
Nope, not at all. Okay, so on to KPI number 3. This one is all about energy efficiency, making sure they're using energy wisely. Back in 2022, their baseline for final energy consumption was 4,810 kilotons of oil equivalent. A mouthful, I know.
So that's how much energy they were using across the board, right?
Yep. Now, by 2030, they want to cap that consumption at 4,320 kilotons of oil equivalent.
So basically using less energy overall. Makes sense.
And then they want to push it even further. By that same year, 2030, they're aiming for 4,104 kilotons. This target is actually stricter than what the EU laid out in a directive back in 2023.
Interesting. So again, they're going above and beyond the EU requirements. What's the thinking behind this?
Well, I think it shows that they see energy efficiency as a key part of their green transition. It's not just about switching to cleaner sources, it's about using less energy overall.
Right. Less demand, less strain on the system, regardless of the source.
Exactly. Now, when you're dealing with all these numbers and targets, there's always the question of, well, how reliable is the data? And how do we know they're actually measuring progress accurately?
That's a crucial point, especially with something as important as this.
Totally. And that's where S&P Global really gave them props. Slovenia is using these well-established, internationally recognized methods to track their data. For the greenhouse gas emissions, they're using guidelines from the IPCC, the Intergovernmental Panel on Climate Change. Those guys are the gold standard when it comes to climate science. And for energy data, they're tapping into Eurostat, which is the statistical office of the EU.
Okay, so using trusted sources and methods. That makes sense.
It does. And it adds a lot of credibility to their reporting. Investors aren't just taking their word for it. They can see that Slovenia is using reliable, transparent methods to track their progress.
So it's not just about setting targets, it's about having a solid system for measuring them. No room for fudging the numbers here.
Exactly. It's all about accountability.
Okay, so we got these ambitious targets, but how does this framework actually motivate Slovenia to actually achieve them? Like, what are the financial incentives, the carrots and sticks to make sure they stay on track? So here's where the financial engineering gets really interesting. Slovenia has set up what's called a tiered coupon system. Think of it like this. The interest rate they have to pay on those bonds, well, it can go up or down depending on how well they're doing against those KPIs we talked about.
Interesting. So it's like a reward and punishment system built right into the bond.
Precisely. If they miss a target, like that 35% reduction in GHG emissions by 2030, they might get hit with what's called a step-up penalty. Basically, their interest rate goes up.
Oh, so there's a real financial consequence for not delivering.
Yep, absolutely. And we're not talking small change here. Let's say they issued a bond worth $1.5 billion. Now imagine they miss that emissions target. They could be looking at a penalty of, say, 25 basis points.
25 basis points? What does that even mean in real money?
Well, on a bond that big, it would mean an extra $3.75 million they'd have to shell out every year in interest payments. Ouch.
Yeah, that's not something you want to just brush off. And I guess it goes beyond just the money, right?
Right. It also hits their reputation. Think about it. A government misses its own publicly stated sustainability goals, the ones they tied their borrowing costs to. That's not a good look.
Definitely not. It could make investors think twice next time they're looking to buy Slovenian bonds.
Exactly. It erodes trust. But what about the other side of the coin? What happens if they do really well?
Well, then they get a reward. If they exceed certain targets, like that higher target for renewable energy, they could see something called a step-down reward, meaning their interest rate goes down.
Okay, so there are carrots as well as sticks. Give us an example.
Sure. Let's say they hit that 34.65% target for renewable energy by 2030. Analysts reckon they could see their yield spreads. That's basically the extra interest they pay compared to, say, super safe German bonds shrink by maybe 15 to 20 basis points.
That's a significant saving.
Definitely. And it makes their bonds way more attractive to ESG investors. Those are the folks who are specifically looking to put their money into projects in countries that are doing good for the planet.
Right. It becomes a selling point for them.
It does.
Yeah.
So it's really a win-win. Slovenia gets cheaper financing, and they're encouraged to meet their sustainability goals.
So it's a pretty clever system. But, what if something unexpected happens? Like A global pandemic throws everything off course. Or what's to stop them from just changing the targets to make them easier to hit?
Good questions. And they've thought about that. The framework has some built-in safeguards. For instance, if Slovenia is late in reporting their progress on those KPIs, like if they drag their feet for more than 18 months without a good reason, bam,
Yeah.
automatic penalties kick in.
Wow, so no slacking allowed.
Nope. Same thing if they try to change how they measure those KPIs, like if they try to fiddle with the methodology. It's all about keeping things transparent and accountable. And there's this other thing called a recalibration protocol.
Recalibration protocol. Sounds fancy.
Yeah, well, it's basically a safety valve.
Yeah.
If some big regulatory change happens at the EU level, something that throws their plans completely out of whack, they can actually adjust their targets.
Okay, so some flexibility is built in.
Yep. But there's a catch. Any changes they make, they have to be independently verified. So it's not like they can just lower the bar whenever they feel like it.
Makes sense. Keeps them honest. So let's zoom out a bit. How does this whole framework fit into Slovenia's overall national strategy? Like, is this just a standalone thing, or is it connected to their broader policies?
No, it's definitely linked to the bigger picture, those KPIs we talked about. They're actually woven into Slovenia's National Energy and Climate Plan for 2024. So it's not just about the bonds, it's about their whole approach to going green.
Gotcha. So it's all part of a bigger plan. And this plan, is it in line with what the EU is doing?
Oh, absolutely. Take those GHG reduction targets. They're totally aligned with the EU's effort sharing regulation. That's the one that covers sectors that aren't part of the EU's emissions trading system. Things like transport, buildings, agriculture, that sort of stuff.
So they're playing nicely with the EU's overall strategy. But remember that whole coal phase-out thing, the one planned for 2033?
Yep, that's the one.
Well, some people are saying that could actually clash with their more ambitious GHG reduction targets, especially that 45% cut they're aiming for by 2030.
Yeah, it's a bit of a head scratcher. I mean, phasing out coal is good for the climate, no doubt.
Yeah.
But pushing it back to the very last minute, it might make it harder to hit those earlier targets.
Right. It's a balancing act, I guess. They have to consider the economic impacts of shutting down coal mines and power plants, the social implications for workers in those industries.
Exactly. It's complicated. So what sectors are they really focusing on to drive these emissions cuts? Where's the action happening?
One of the big ones is transport. It makes up a hefty chunk of their emissions, something like 39%. They're looking at expanding rail networks, both for passengers and freight, trying to get more people and goods moving on trains instead of trucks and cars.
Less pollution that way.
Yep. They're also promoting low-emission vehicles, electric cars, hydrogen fuel cells, things like that. And then on the energy front, they're pushing for more solar power, especially putting solar panels on public buildings. Plus, they're working to upgrade their electricity grid to better handle all the renewable energy coming online.
Makes sense. You need a modern grid to deal with all that solar and wind power. And what about industry? That's a big emitter, too.
Yeah, so they're looking at some high-tech solutions like carbon capture in energy-intensive industries. Cement production is one example. And of course, they have to make sure their heavy industries are playing by the rules of the EU's emissions trading system. That's the big scheme for capping and trading emissions allowances.
Okay, so they've got a plan. But let's be real, there are always challenges, right? What are the roadblocks that could really trip them up?
Yeah, a bunch of them, actually. One of the biggest, remember all those protected areas, the Natura 2000 zones?
Yep. Over a third of their land?
Well, that makes building big renewable energy projects a nightmare. They tried to build a wind farm in the Karst region a few years back, but it got shot down because of environmental concerns.
So it's a constant battle between development and conservation.
It is, and analysis suggests that less than 0.5% of Slovenia's land is actually suitable for large-scale renewable projects without running into environmental conflicts.
Wow, less than 0.5%. So they're really squeezed.
They are, and then you have the socioeconomic issues. A lot of rural households still rely on fossil fuels for heating, things like coal and wood, and public transport in rural areas is pretty limited compared to the cities.
So the transition to cleaner energy could actually be harder and more expensive for people in those areas.
Exactly. And then there's the pushback from industries. Decarbonizing heavy industries like steel, it's not cheap. We're talking billions of euros. And the EU grants available, well, they don't cover the whole bill.
So there's a real risk that some industries might drag their feet or even resist the whole green transition.
Yeah. And then you have the data and verification issues. Remember that healthcare bond they issued back in 2023?
Vaguely. Remind me.
Well, they had a tough time proving that their investments were actually leading to better health outcomes. They could only verify about 61% of their claims.
Ouch, not a good look.
Nope. And then remember what happened with the Eurostat GHG baseline revisions back in 2024?
Ugh, wasn't that a bit of a mess?
It was. They basically revised their emissions baseline upwards by over 4%, which meant Slovenia had to scramble to adjust their targets.
So not only are they dealing with complex data, but the goalposts can move too.
Yep. So that's why having robust data collection and verification is absolutely essential.
Okay, so lots of challenges. What did S&P Global recommend they do to overcome these hurdles?
Well, they gave Slovenia 4 key pieces of advice. First, speed up that coal phase out. Don't wait till the last minute. Make it happen sooner to make those 2030 targets more achievable.
Makes sense. Rip the
Yes.
Band-Aid off.
Second, go big on decentralized energy solutions. Those smaller scale, community-based projects. It's the best way to work around those land use restrictions.
Right. Embrace the small and local.
Third, don't forget about the people. Use some of that money from the bonds to help those rural communities transition to cleaner heating and better transport. S&P Global suggested setting aside about 20% of the bond proceeds for that.
So just transition. Make sure no one gets left behind.
Exactly. And last but not least, cut through the red tape. Streamline those bureaucratic processes for approving renewable energy projects. Maybe set up a special task force to get things moving faster.
Okay, so those are the recommendations. Now let's zoom out even further. How does all of this connect to those big global sustainability goals, the UN Sustainable Development Goals?
Well, the links are pretty clear. That ambitious 57.75% emissions reduction target. That's a direct contribution to SDG 13, climate action.
Fighting climate change. Check.
Then you have that goal for reaching 34.65% renewable energy by 2030. That's a boost for SDG 7, affordable and clean energy.
Clean energy for everyone. Check.
And that energy efficiency target, capping consumption at 4,104 kilotons of oil equivalent by 2030. Well, that also feeds into SDG 13 because saving energy is a big part of tackling climate change.
It all adds up. So Slovenia is showing that even small countries can make a difference on the global stage.
They are. And they're proving that financial markets can be a powerful tool for driving positive change.
So let's wrap this up. What are the key takeaways from Slovenia's big leap into sustainability-linked bonds?
Well, it's a big experiment, really. They're the first in the EU to do this. They're tying their financial well-being to their environmental performance. And they're doing it in a pretty transparent and accountable way.
But as we've seen, it's not going to be easy. There are real challenges. Those land restrictions, the socioeconomic disparities, the potential for industrial resistance.
For sure. But if they can overcome those challenges, well, it could be a game changer, not just for Slovenia, but for other countries looking to finance their green transition.
It could set a precedent.
It could. So here's something for everyone listening to think about. We've seen the ambition, we've seen the challenges. So what do you think is the most crucial ingredient for these kinds of bonds to really take off globally?
Yeah, what will determine their success? Is it about setting really tough targets, the kind that force countries to push their limits?
Or is it more about the financial side, making sure those incentives and penalties are strong enough to truly change behavior?
Or maybe it all comes down to political will. Having leaders who are truly committed to making this happen and willing to do the hard work of implementation.
Lots to ponder there. And if you want to learn more about this whole world of sustainable finance, there are some great resources out there. Check out the ICMA Sustainability-Linked Bond Principles. That's the foundation for what Slovenia is doing.
And don't forget about the EU. They're doing a lot on green finance, too. Lots of interesting initiatives to explore. So thanks for joining us for this deep dive into Slovenia's pioneering move.
Always a pleasure.
And until next time, keep diving deep.